Good afternoon, everyone. It is February 26th. It's Thursday afternoon, and we are back with another edition of Chart the Markets. And we are here today um, to kind of get our handle on what's going on in the broader scope of things. And, when markets get crazy and you hear that voice inside your head say, hey, this might be above your pay scale. You might be venturing into a pond that could be a little too deep, or for whatever reason you feel scared of the dark. Listen to that little voice, because that little voice is trying to save you from something. And you're not going to win any prizes. You don't get to pick a stuffed toy just because you gutted out a time that was uncomfortable and put you in too much risk. So when you feel like you're losing control, and you all know exactly what I'm talking about, you try and revenge trade, maybe you've had a few losers in a row, you lost a little bank, you're trying to earn it up. You know the drill. We all know when it's happening, right? We do. We have to be honest with ourselves. One of the reasons we do this is because, we have that opportunity to be honest with ourselves. Listen to the chart. Not overthink or outthink or front run. So when you feel uncomfortable, it is okay to say to yourself, you know what, I got to take a step back. This is a little too much for your level. And we're all going to go through those times. At all times. It's a constant evolving phase. But don't be down on yourself if you're feeling that way. Right? We're going into a period that is going to be volatile. And that volatility presents an opportunity to be your friend, but it also presents an opportunity when you're not prepared for its direction to really be problematic. So if you feel like you're in danger, step back. Do it right away. Don't overthink that. Because that's that little voice inside your head trying to tell you, trying to save you from maybe getting hit by something that you didn't see coming. So that's not a bad thing. If you recognize that feeling, that's a huge win. Be proud of yourself, and then just act on it. And right now, we're looking at the NVIDIA chart, daily chart of NVIDIA. Great earnings report, right? Sure. I guess comparatively, it's not something that I pay too much attention to, and this is why. Right. Earnings were good, stock sold off. And everyone's going to say why. Right? And at the end of the day, it doesn't really matter why, does it? Because all that matters is that we have the ability to read price on a chart so that we can monetize that chart. And this is something that has been a runaway freight train, and there's a lot of reasons not to want to throw yourself in front of that train. This is the 4-hour chart. Here's the daily. And then the weekly. And maybe we should just leave this weekly here for a moment. Nothing goes up forever, and I'm not suggesting that this is going to be a complete and total collapse or anything like that. That's not what we're saying. But what we are saying is when the chart starts to align with this particular direction, pay attention to it. It means something. So when we look at the weekly, and we're going to spend time today not on smaller time frames. If we do, it's only going to be for an example's sake, but we're going to be working off primarily the 4-hour, the daily, and the weekly. And on the weekly chart, do you notice that the stock started to lose relative strength? It doesn't want to break the zero level on our Z-score indicator. And I've joked with David Nikoski that I'm going to coin it the David, right? Because he's the one that really convinced me that relative strength was something to be, reckoned with when it comes to direction. When the strength's there, usually price goes in that direction. When it loses that strength, it usually falls. And we could see on the weekly that the relative strength has been kind of waning since November. But when you break zero, that's when it gets problematic. And this effort here to kind of break it to the upside wasn't happening, all while earnings are coming out. Now, one of the things we talk about when we're using signals is that when our script presents a sell signal, let's assume that it does this on the weekly chart for example's sake, and our z-score breaks zero, that is a pretty strong confirmation, typically, and it is worthy of your attention. On the right-hand side of our chart, we have a volume profile. Volume shelf, volume gap. The volume shelf is something you can sit on. The volume gap is something that you can fall into or jump up through. In this case, potentially fall into it. And where does price sit? Well, on another level, another bench. You can see in here, but realistically, more like in here. That's the VWAP on the weekly. So if this falls, at least we have an understanding of where it can go. Why is that good for you? Because if you're long and you're looking at making sure you don't give too much away, spotting these things on the longer term charts can be really helpful, because you could be into a trend move, right? And then we do the same thing we always do. Break one level, find the next level. So we've identified this area up here on the weekly as kind of being flat and condensed. Doesn't have a lot of relative strength, which probably explains why it doesn't want to go up, because there's just not a lot of willingness to do that. Starts to make sense. And you can see the downside risk, right? We have three choices: up, down, and sideways. Done a little sideways. Maybe it's time to move up or down. So that would be the downside risk down here. And when we break one level and look for the next level, there's the 50-day moving average. And if you fail the 50, you look for the 200. And now everyone's going to say, well, that's lunacy. Well, maybe. But all we know is that time and price come together. And when you break one level, you find the next level. And we do this every week to show you. Break one level, find the next level. If you break the 20 up here, produce that sell signal that we spoke about as you break the zero level on the z-score, which is telling you that the relative strength is not there. Yeah, you can kind of see how that unfolds. And lo and behold, the 50 is right in the middle, essentially, of that volume gap. So if you start to break the shelf and fall off, even if you hung on with your fingertips, your dangling feet may hit it, right, in the form of a wick. And this would be the first touch of the 50. Now you can see it's been playing around here at the 20 for a while. So it's like put up or shut up time. We'll see where we end up, right? We got a couple days left, or actually 1 day left, and then a little bit of trading next week before our first session. But we'll see if we end up near this 50. But it is simply a break one level, find the next situation. There's a lot of money in this stock. I'm sure they're not going to want to let it fall too low. But nevertheless, the chart doesn't lie. And there's probably another level in here before the 200. If we throw in the 100, sometimes that gets a little attention, as you can see here. Which is kind of good to know, right? Because we know it's been touched once already. So we're not expecting first touch support like you got here. if we do come back to it, if you were to break to 50, it would not be the first time. And this is just a repeat play, repeat play, repeat play. And when we look on our daily chart, and let's just take some of the noise off for a moment. We can see up here that this is the upper value range on the volume profile. Our price just doesn't really seem to want to break above it. This big red candle, although its weight and things like that is a little spooky feeling, it hasn't broken the point of control level. This is the VWAP down here. It could visit it. And then you've got the lower value range. The point is that it's within a range. So I think what we're looking to see is, does it break the lower range? And if it does, where does it go from there? But we've already kind of highlighted that, right? You don't like on the daily that you're going to close below the 20. And you have broken the Z-score too, the 0 level. So, but did we have any clues? Well, let's take a look at the 4-hour. And the hard answer is not really. Because we had price moving up yesterday pretty much right into close. Earnings came out, and this is why, it's one of those reasons you have to be careful around earnings when you're trading. Earnings are good. Everybody expects the stock to go higher, and this is a case where it did for like 5 or 10 minutes, and then it all ended. Tomorrow, knowing this, the way this stuff's treated, you could end up with a bullish engulfing candle, and this whole conversation could be for naught. But I think we are in kind of a range where breaking one level and finding the next on the longer time frame, you should pay attention to it. Now, what happens to the indexes when things like this melt? Well, because they're so heavily weighted, I think you can anticipate that showing up as well in indexes. This is the danger of having a whole lot of money in 7 stocks. So we learn by doing, I suppose, right? But that's the deal with NVIDIA. I don't care what the earnings were. I really don't. And you've heard me say this before. Excuse me, I don't care. Should I care? According to some people, I should. But I'm more concerned about what the money's doing. That's all. I'm just going to do what I'm told. The chart tells me to buy something, then we do that. If it tells us to sell something, well, then we do that. Can we differentiate between chop and breakouts? I think so. Like, let's not make this more complicated than it needs to be. And one of the ways you're going to make things complicated for yourself is by trading instruments that you don't fully understand, like options. Right? So if you're trading options without really fully understanding the implication of trading options, that will in all likelihood be problematic. So it's not just what you're trading, it's how you're trading it. And all of those things make a difference in how you calculate risk and reward. But trying to swing for the fences all the time, you'll probably strike out a lot. A lot. So I think what you might want to do is just start looking for things that make sense over the longer time frames. Find ways to drop the anxiety level. There's volatility all around, right? And the market kind of feels, and don't just take my word for it, I talk to a lot of people, but it often feels like we're waiting for the other shoe to drop. And then we kind of get over it and things, the beat goes on. I kind of feel like maybe we're running out of those opportunities. And at some point, we're going to start to grind in a direction that we're unfamiliar with. In other words, a little bit down. And I'm not saying big red candles or anything like that, but the kind of thing where you wake up in 6 months and go, not only did we go nowhere, we actually came back to X. But it happens slowly and made you feel like you were being lulled to sleep. A downtrend with these intermittent series of green candles that make you second guess the trend down. And before you know it, it's been, everything's been eaten up. And if we look at, just as an example, this is the weekly. I don't know how fair this is going to be, but we're doing it anyways. If we just throw fibs on this move, right? Because we believe in Fibonacci's, fractals, and filters. So when we look at our fibs on the weekly move, and I'm just taking the swing low, throwing it up to the high, where's 618? The golden ratio that we talked about. 222. It sounds like a lot, right? Sounds like a big drop. It's an 80 some odd dollar drop. Yeah, it is. But that's what Mr. Fibonacci says, that this in fact is our high. So listen to the little voices in your head when you present them with logic. Listen to what they tell you. So if we do start to break the 20 here, again, this is the first touch, so you're getting the support that you would hope to get for now. But if you break it, what are you looking for? You're looking for the next level down, which is the 50. And this is Google. There's your 50. Where's that? At 235. So hang on. 618's 222. The 50's sitting around 235. That's pretty close, don't you think? Not pin the tail on the donkey. That's not what we're doing here. But you have two very reasonable targets, if this was to break down, to either look at, maybe consider buying or shorting to. Break one level, find the next level. Current price looks for past. And when you look at this Google chart, what do we notice? Look at the volume profile again, right? What we're seeing here is support from the shelf, right? Like when you see volume there, you're going to get 9 times out of 10 price activity at that level while it chews it up. But if you fall, there's the gap again. And we've shown time and time and time again what happens when price hits it, going up and down. So we're so used to price going higher that a lot of traders seem to need to convince themselves in some respects that, hey, maybe we're going to fade for a while. And the sooner you can make that recognition, the better. You can't fight the trend. Like one of our rules is what? When price is trading on the north side of these levels here, essentially these are our filters, the T-line, 5 EMA. You don't short. As long as price is trading on the north side of these levels, you do not short. And you're going to say, well, you would have given up those 3 candles. Yeah, I would have. Right? Do not short on the north side of that filter level. Do not long on the south side of it. Because if you break those, the most simplest of rules in this case, you've already put yourself at a massive disadvantage. What do we talk about? The trend is your friend. We tell you not to short as price is moving up on the north side of that level. Don't do it. Look how many times you would have been killed trying to do that. Just leave it alone. What you're being told is, look for your opportunity to long again. This is still open, diverged, up and to the right. We don't fight that. There's no point. It's a zero-end game for you. You're just not going to win that battle. But before you go all in, and now actually we are starting to print a weekly signal, but when before you throw everything at including the kitchen sink at something, you really got to make sure when you're sitting here at support that you actually do break it. You don't want it to be one of these situations. You got price moves up, comes back, gives you lots of reason to think it may fade, and then you get one of those bounces, comes back up, takes out this high. We don't want to be stuck here. We want to wait for that confirmation, which I think we're pretty much getting it, but I would be more comfortable seeing it fail that 20 on the weekly. But if you were on the daily, you'd be in already, because you would have been up here. And if you notice, the break of the Z-score to the downside and the signal that we're lighting validate one another. In this case, they come one candle after each other. That's okay. That's okay. Sometimes they fall on top of each other. That's fine. But when your relative strength is validating the direction of price, in this case, to the downside, pay attention. It's telling you something. There's a message there. And we talk about our failed breakouts. Well, if we look at the daily, that's what this is shaping up to be. Right-headed, the move down. You got support at the VWAP. That's kind of tucked literally right under the lower value range. But you bounce there. You wick the 50, and you fade. So you do that rolling over, take out the previous wave's low again. The interesting thing is, though, notice what happened on the Z-score dashboard. That rollover here was essentially the failure of the attempt to meet or break the zero level on the Z-score, reinforcing to you that the relative strength, at least for now, does not appear to be there. And where was the on-ramp? The on-ramp was the 4-hour chart. The 4-hour chart for me, and whether you adopt this or not is up to you, but for me, it's the on-ramp and off-ramp of those longer time frame charts. If I'm trying to, get a really good entry on a daily chart, I'm paying close attention to the 4-hour. This would have been a great example where you really would have had a nice entry early, essentially at a top. And that allows you the ability to kind of wade through this stuff, if you choose. So we'll see what tomorrow brings. But right now, you can see how this all unfolded. Was this a runaway freight train for a long time? Yeah, look. And when we look at longer time frames, because everything is fractal, have we broken? This is the monthly. No, we're still closing. We're still closing above the 5 EMA. So the monthly is still a very bullish chart. It doesn't start to get a little sketchy until you get to the weekly. But just for interest's sake, and you can do this on any time frame comparison that you want, let's just take the T-line. The T-line is at 280. That's the monthly. On the weekly, 280 is what? It's this level in here. So even if price came back to 280 on the daily, on the weekly, that isn't really anywhere. That puts the 50 at 236. So what is 236 on the monthly? Somewhere in here. So 236, which is the 50 on the weekly, is this level on the monthly. So time and price come together. It could be an area where the 20 on the monthly gets tagged. Now this is a long-term chart, so we're not going to look too much into it yet, but it's interesting to watch these things fractally. Right now, I'm paying a lot of attention to weekly charts to get an idea of longer-term trend without the noise on some of the dailies that's caused by all the volatility. Right? So pay attention to the basic stuff. Right? Don't get lost in the thick of thin things. You don't have to be constantly running around time frame by time frame looking for the right opportunity. Now, here's Bitcoin. Everybody's favorite crypto. So, just to recap off the weekly, break one level, find the next level, break that level, find the next level, break that level, find the next level. This is still a bearish chart. Now, does this look like a little bit of a bottoming pattern? Yeah, sure, but I'm not paying attention to that so much as I'm paying attention to the fact that our filter level, our T-line, and 5 EMA are diverged down and to the right. As long as that is the case, just remember that's still bearish trending. What I believe you're seeing here as this little bottoming pattern, you know how we talk about how price gets chewed up when it finds the shelves? Here's a shelf. Quite a substantial one. And that's what price, this level here, is what it's chewing up. And you can see back here all of this past price. Current price was looking for past price. Now we're here at a particular level of it, and we're chewing away all of that past price in order to get to whatever we're going to do next. We're either going to hold the 200 or we're going to fail it, fall off the shelf, and then into this gap. Conversely, you bounce, this momentum starts to fade perhaps, and maybe we come tag the 200, maybe not, but you'll move up towards the VWAP and up through this gap up in here. This is where becoming indifferent to price is really important. And, I'll be honest, when I first started doing this, I kind of was of the mindset of where I was concerned about direction of price. I thought that's what this was all about, to make sure that I've got exactly, buying what everybody else is buying, making, that I was wrong. Just follow the chart. Chart's going to tell you everything you need to know. Absolutely everything. Now, still bearish, so let's not forget that. Is the relative strength in our favor? No, unfortunately it's not. This oscillator is basically working off the same architecture that our signal script is, in the form of an oscillator, but it doesn't include the callouts and doesn't include the trade management component, right? Where you have your stop loss, your trailers, and then your 3 take profit levels, and of course your leverage level. So that you can plan how to structure your trades in advance. Okay. Now, moving back to this though, break that 200, break the 200, I'm afraid we fall into here. This week or two of not falling anymore could be a false sense of security for some. So I think if we move to the monthly, are we going to learn anything? We still have, you know, I hate leaving these little naked wicks down here. I have a feeling we might come back and tag that. But that'll be another candle at this point, because we're probably going to run out of time soon. So we might end up back here for another tag. But you can certainly see that the relative strength as of yet has not come back in our favor. It's just not as of yet. And you have to trade what's in front of you, guys. You have to trade what's in front of you. Now, this is the Bitcoin daily chart. We all remember this. I'm actually going to switch screens for 1 second because I'm going to blow this up a bit. Yesterday's candle looked like, the world was its oyster. There was nothing in front of it. As all we could see was the gap to the upside, the lower value range, the POC. Things looked great. However, if you get too ahead of your skis, you forget to look for very basic little things. This is the 20-day moving average. Where did we close yesterday? Right at the 20. Now, did you close above the T line? Did you close above the 5? Absolutely. I get it. Hopefully, if you're long or you're looking to be long, hopefully this is a back test. Coming back to the T line, and then the following candle starts to move higher again. Right? That's the upside version. The downside version is that this is a failed breakout. That we moved up, failed to break the 20. This candle couldn't do it. We have these two equal tops. We are still trading above that level, which is encouraging. However, with the markets the way it's been, we don't want to get too far ahead of our skis. We're still working under a sell signal. So we don't have our confirmation. Even with this big green candle from yesterday, it didn't have enough to give us the signal to change trend. And the relative strength hasn't broken the 0 level. Right? You can see it's right here. Now, we said the other day, the signals that we pay attention to are the ones that fire and break the 0 level in and around the same time. Like here. So we don't have that reversal yet. Do we have a little bit of a bottoming? Sure, but we don't have the confirmation that we need to be decisive. Let's take a look at the 4-hour. It might tell us a slightly different story. So what do we learn from the 4-hour as we look at the daily? Basically, price currently is just sitting right on the T line. And interestingly enough, it hasn't closed below it. Right? It's closed right on it, currently sitting right on it. And the previous candle closed just underneath the 5 EMA. So it's not going, it doesn't really want to give you any clues, does it? But we're just going to be patient. We're going to let the market come to us, and we're going to trust our charts. And if you were long, if this was your entry onto the daily, right? We're always hoping to find a good entry onto the daily. This could be anything that we're charting. You would have been in down here. Can you afford to kind of wait for this retracement? Yeah, you could. Right? Again, that's your decision, but you get to make that decision only because you had a good entry. And why was this a good entry? The signal fired when we broke the 0 level on the Z-score. These two validate themselves beautifully. not by validating each other with the same thing, but by excuse me, but by validating with things that are very different. Relative strength and price are not the same. But for price to, to move in the direction that you want it to move in, it's going to need the relative strength behind it to do it. And if you see price fading or price moving higher, but the relative strength fading, what does that divergence tell you? It's telling you that the smart money's leaving the building, and it's momentum that's pushing price higher. And then when it gets there, what is it? Then it's exhausted, right? Because all the smart money's already left. And then it's just Joe Blow and you trying to fight to see who gets out the door. That's what everybody else is doing. But we're just going to follow the chart. Create entry, safe entry, right? That's kind of what we want to do. And how would this have looked? Whoops. Here we go. So we're going to use, let's say you're using 20% lev. Your first target is going to be, let's see, 20, 30. I'm just making this up to try and show some scale on the chart, okay? There was your buy signal. That was your stop loss level. Your stop loss didn't get hit. So you've taken out all three on that move on a 4-hour. And now you can see the scale. So what happens is, what I just did was I just set it so that as you hit the target levels, it removes it from your chart. So that was your stop loss. And all of those levels that were on here are now gone because you hit them all. And what were those levels again? Just to remind ourselves, 20, 30, 60 at 20% leverage. So it was a very doable trade. Right? Now you can see here, you left 2, right? So you only took 30 on that one. And then you would have been eventually stopped out. Especially if you're running a trailer, which you have the option to do in here. So let's not get ahead of our skis. Let's just be reasonable, rational, don't over risk, and slow down. Right? You've heard the expression, speed kills. Well, it does. And it pretty much does in anything we do. So we're going to wait to see what the 4-hour chart tells us about Bitcoin. Would this be a first touch of the 20? Yeah, it would be. Would we expect a bounce? Absolutely. Absolutely. But if we don't get it, what does it mean? It means that what we're looking at on the daily, as far as the fade goes, might happen. But we just use multiple time frames, that's fractal analysis, to look inside these candles. Right? We don't have to make this any more complicated than it is. We really don't. I would encourage you just to slow down, block out the noise. The noise is all the drama. Right? The noise is the massive information dump that's constantly around us. Block out the noise. Focus on what money does and not what people say. If we listened and did everything that other people said and told us to do or insinuated that we should do, we would be broke and stupid. Having the ability to think for yourself is the greatest gift you can give yourself. And in this world, as far as I'm concerned, having the ability to learn price on a chart is that gift. No one will ever take it away from you. Nobody will. Will they tell you that you don't know what you're talking about from time to time? Will they try and humiliate you and make fun of you? Maybe. Who cares? I don't care. I'm a grown man. I'm pretty comfortable in what we do here. So do what you want, dude. You do you. You can make it as complicated as you want or as easy as you want. You can make it as risky as you want or as safe as you want. All of that stuff is on you, not on anybody else, not your mentor, not your teacher, not your mommy. It's all on you. So if you go into something too heavy, long or short, and you're not running stops, and you're using lots of leverage, and you're trading over short time frames, whose fault is that when it blows up in your face? Not your mom's, not your boyfriend or your girlfriend, or your dog, or your cat, or your guppy. It's your fault. This is not the place where you point fingers at other people. This is the kind of thing where there's only one person responsible for what you do, and that's you. Everything that you're going to do on the chart is interpreted by you, and the actions taken are by you. Now, oops, sorry, Humpty Dumpty was up there. That's my bad. Forgot to take him off. Now, this is NAS 100. Weekly chart. 4 hours, dailies, and weeklies today. Does this look like a top? It looks like a top, right? Now, we can blow our brains out trying to declare when a top is actually a top, but for interest's sake, I think these little wicks and up here is, for now, it's our top for now. Fair enough? Not going to argue that with anybody. It's our top for now. And at our top for now, the market told us, because this is a language, it's based on math, math is a language, and we're interpreting the market based on mathematics, chart told us to sell. So at an unarguable top, the chart told you to sell. What do? Do you go long or do you sell? Do you buy while you're trading on the south side of our filters? No. You either exit your long at your choice, I guess, if you feel like you don't want to give anything away. But what you don't do is long when price is underneath here. You just don't. Right? You're increasing the probability of making a mistake. We're not going to be 100% all the time. But my gosh, we can make a real effort not to screw up. So rule number one, especially when things are crazy like they are now, do not short when you see this, and don't long in here. Start with that on any time frame you're trading. If you start with that, I guarantee you're going to start to have more success automatically. I promise. Right? You just will. So here we are with a sell signal at an evident top for now, where we've broken the 20 MA, and we're trading below the T line and the 5 EMA, which is our filter system, which is diverged down and to the right. We are sitting at or around the point of control on the volume profile, which is identifying the most dense volume for us. And that's where price has come back to. That's why it's playing around this level. Now, if it fails, where's it go? It goes to the 50. Where's the 50 sitting? Right in the middle of the gap. Break one level, find the next level. Do you go straight there? No. No, you don't. Sometimes you do. But, expect price to move up and down like it normally does. Nothing goes straight up, nothing goes straight down. But the trend is important. Because again, all through here, as people, you see these 3 weekly candles that are kind of intimidating. If we remove them and just look at the trend itself with no candles on it, the trend was up. You can see there was something going on here, right? Because you get that kind of point out that's giving you a sign of those changes in direction. And when you flip the candles back on again, lo and behold, makes a lot of sense what that was now and why it didn't break. This is really, pretty simple logic. It's one, if this, then next, right? If this, then that. One little bit at a time. So if we fall into this gap and we chew up what we need to chew up in the form of past price, liquidity, whatever you want to call it, and you fall into this gap, you can see how you find the 50. Is it unusual to find the 50 on a weekly chart? No, not at all. It's common, right? If you don't see the 50 for a long time, after a while, you're going to get concerned. So we can anticipate, or at least expect, to see the 50 again. Nothing goes straight up. And if we don't hold it, you'll find the 200. Time and price will come together. Will you find the 200 here? Probably not, because time will progress. But it's the level that we're looking for. And we talk about how we fan out all of our averages, and then when we come back on a retest, it looks like it's a million miles away and everybody has a heart attack. So, heart attack or not, price is just doing what price was going to do. Break one level, find the next. If it went up in a parabolic fashion, like it did here, creating a big volume gap, well, you got to take the good with the bad. Or you can choose to sell at the top, or what appears to be a top, and take your profits. You can do that. That doesn't sound crazy, does it? You're not going to grow your bag by not taking your profits. Just remember that. Right? You have to be taking your profits on a regular basis. Right? Let's look at YM, which is the Dow, or the equivalent of the Dow, as the futures contract. Still a bullish chart? Yeah, still a bullish chart. You're still diverged open and to the right. Maybe this will illustrate it a little bit better. Right? Open, diverged up and to the right. And at some point in time, will we come back and have a look at the 20? Sure. One time will we fail it and come back? Yeah. But you have to know what you're to look for to identify when that happens, or potentially can happen. That's why using a system of some sort is beneficial, so that you're consistent in your approach, right? And with consistency comes improvement. It just does. Buy signal. This is an interesting one, isn't it? Because the relative strength was not there on the move up. So there's like divergence there, which makes all of this kind of interesting. So what I'm going to do, I'm just going to change this to a line just for a second. Whoops. Line. There we go. Okay. I find this actually quite interesting. So, your relative strength was weak for quite a while, and it really didn't start to pick up on the weekly chart anyways until late December, mid-December. And now it's overextended. Like, that's 2 standard deviations, that red line and that green line. Anything above that, you start to get a little stretched. So we haven't broken 0. We haven't broken the 20. We're not even trading below the T line for that matter. So again, it's still a bullish chart. Relative strength is above 0. I get it. But a breakdown here could be really interesting. All of this is light volume. Anything gray on your volume profile is light. And we know what happens when price encounters that light volume. It moves through it quickly, or can move through it quickly. So if this starts to wane, and we do produce some selling, you better hope that you hold the 50, because it's going to feel like a long way down. And when you go straight up, like essentially straight up, being facetious a little bit, you can expect, or you should not be surprised, if price was to come back to the point of control, as an example. How many times we see that? Time and time and time again on all the time frames. Price actually came all the way back to the point of control. Not in a day or anything like that, but over time. Having the ability to read price on a chart is something no one's going to take away from you. Understanding when you're on the right side of something is critical. If you're long here, you're on the right side. End of story. If you're short, you're not. Simple or as complicated as that. Let's take a look at gold and silver. So here we are on the weekly chart. And the gold and silver charts are really kind of interesting, because just when you think they can't move any higher, they seem to find a way. And again, simple stuff. We just have to follow the chart. The system that we use for a filter, it's open, diverge to the right, up and to the right. So hey, we're in a bull trend. This candle has actually broken away from the 5. Like, we kind of like to see the price ride these levels if it could. When it gets extended, you usually get a little bit of air, and price wants to close that little gap off. But this is still a very bullish chart. So now we're going to the daily. Choppy up here? Sure. But the trend is still up. We have not broken trend on it. And what I mean by that is, let's just kind of... Oops. Does that make sense? Yeah, it's close enough, right? Just trying to show you the support on the daily at this level. Now, are we going to live and die by these trend lines? Not necessarily, but it's kind of nice to know that you're still on the right side. Your 50 is well above your trend level, so is your 20, although it's arcing. Price is still trading above the levels that we deem to be bullish. Drop our time frame down to the 4-hour, because it's always nice to look inside these candles. And all of a sudden you look a little chattery. So we don't want to be trading this stuff in here. Right? It's just too much chop. What we're really looking for are the breakouts and the breakdowns. One of the ways that you're going to find them a little more consistently are using the Z-score in combination with our signals, because those are the ones that typically have the momentum. We want to catch that, right? That's what we want to catch. We honestly don't know, when we see that candle, what's coming after it. right? We don't know. What we do know is what is in front of us. Let me just take this down for 1 second. There's our buy signal. We know, before this candle is a giant green candle, we know in front of us that we have the 20 and we have the 50. We've been in here long enough to know that we have to break those levels in order to move on. So we can expect one of a few things. That current green candle to hit the 20 and fail, or blow through it like it did and reach for the 50, which it did. In doing so, it creates all this air, because you got a little doji up here that can't break the 50. Is it bullish when it's, above the 20, above the T line? Sure it is, right? But that rejection at the 50, what does it mean? It's a retest, the back test. And then it took off. Took out this high. As long as this, and please remember this whenever you're the T line and the 5 EMA. Notice how it's diverged open into the right, up to the right, as it approaches the 20. Now it's broken the 20. Still open, diverged up into the right. Just one candle at a time. I don't know what's coming after this candle. Is all I know is that I popped my head above the 50 and now I close below it. However, I'm still on trend. Right? I'm long as I'm trading on the north side of the T line and the 5 EMA. Red candles don't necessarily produce changes in trend. And here's 3 of them. The trend, this mechanism will tell you whether the trend's being changed or not. And price moved higher. Do you have any idea as an individual that you're going to get a run like that? No. You don't know. It's just one candle at a time. Just trust your chart and mitigate your risk. So if this was your entry candle, I don't think you would have been stopped out here. Plus, you know what you're looking at. Right? You're looking at that chart. Hey, and if there's chaos all around you and you need a calming tool, just take those candles off. And you can see real clearly that divergence up and to the right was breaking these moving average levels to the upside. And as long as it was doing that, you could feel pretty comfortable. And when it's time to take your money, the chart's going to tell you that too. So here we are trading chop, right? Or in chop. And we don't want to trade that. Because that ultimately just becomes dead money that sits at risk. As a trader anyways. Now let's look at silver. Start on the weekly. You got your buy signal on the week of the 7th of April, 2025. And let's say that was $30, $31, something in there. Since April 2025, you would have just been watching the chart do this. One candle at a time. Right? You'd see that big red one and then this, and you're like, I don't think so. It's probably in here where you realize maybe you missed out on something, or there was something more to this. But we don't know, right? This is a language. I believe we're talking about the language of the market. And when the chart tells you that you should be long even when it doesn't feel right for a while, just listen if you can afford to listen and wait. And this thing went absolutely nutty. And even during weeks of red candles, did your trend change? No. Impulse up, sideways, back to the T line, the beat goes on. How many times have we seen that? Millions. Sideways? Do you break trend? No. Do you close below the T line? No. Divergence still open up and to the right? Yes. And you're still in the trade. Even now, if you were following the system. Now, these two crazy candles probably would make you want to change your mind a couple times. But as far as following the trend in your chart, you're okay. This wick of the 20 and then popping, that's bullish. In my mind. Especially when this level stays diverged and open and up. So does, on the weekly chart, does silver look like it's ready to roll over? Not really. Yeah, you can see that little M pattern forming. I see it too. But it's still a bullish chart. And on your daily, this is interesting. So you're able to break the 20 and the 50 in here. This looks like it might be another one of those little back tests. You came back, wick to the T line, and then moved higher above both the T line and the 5 EMA. To me, that's bullish. Now, do you like the way the 20 is kind of arcing down on top of the 50? No, that's never a good look, right? Nobody likes that. But the chart itself is obviously still bullish. Where did you find price balancing out a little bit? Right at the lower value range. Why? Because buyers and sellers have been there before. And it's a familiar place. So now that you've broken the 50 and you've broken the 20 and still holding all of these levels, I guess it's only fair that we start looking for other levels. Well, on the daily, there aren't any. Trading above everything. So if we continue this move higher, what are we looking for? Well, you're looking to break that previous level. You can see in here, and then the top of that wick. You want to see price break through that level because that's somewhat structural. If you do, see this little gap over here? This actually is kind of on a sliding scale, getting a little narrower. So you get into this volume gap to the upside, and before you know it, you're shooting for the upper value range, and really what you're looking for is the previous wave's high. So just to give you an example of, where might we go next? Up here. Not necessarily in one candle or anything like that, although it happens all the time. Be careful of this M pattern. So you see here how this candle extended itself so far away from the T line and 5 EMA. Little pullback creates that middle channel for the M. You could still do this next week, right? Have another big candle, shoot up here, do something similar, and create that type of equal top on your short-term indicators. I pay close attention to that. M's are murders, W's are winners. And you don't want to be spelling murder while you're hanging on to your trade on the chart or anything like that. Right? You want to be long gone before you get to that point. Now, let's look at our friend XRP. I always have a problem finding XRP in my... There we go. Weekly chart. What do you think price is looking for? You had a big day yesterday. Like everything had a big day yesterday, to be honest. And then there's today. What did yesterday do to our weekly candle? Nothing. Is all it did. was wick the 5 EMA and pull back. That's not bullish. That's bearish. And I'm sorry, but this trend has been very organized. So do we go long when we're trading on the sell side? No, we don't. The chart will tell you when it's safe. Everything else is just a front run. And that's where you end up getting kicked in the teeth. Because when you're about to front run something, I can guarantee you there are other things that you're not paying attention to because of the mania of trying to front run. Waiting is boring, right? Letting the market come to you is boring. Waiting candle by candle is boring. But dropping your time frames down to try and validate an entry when you literally have the intention of doing the opposite on a longer time frame is not going to be the recipe for success. Don't force the trades. Just follow the chart. As outlandish as it may appear to you at times, just follow the chart. You know, there's the wick of the 20 we pointed out earlier in the week. Did that have any bullish momentum to it whatsoever? No. What happened? Failed breakout, roll over. You've taken out the previous wave's low. In this case, you literally wicked the 20. And the bottom line is the trend is still intact. In the midst of this big, big, big volume gap. Massive volume gap. And how did that volume gap get created? Right over here. Whenever you see this to the upside, please know that there's going to come a point in time when price falls into that gap again. Just make a mental note to yourself to keep an eye on that chart at a later date, because when it does retrace, it's a very monetizable opportunity. But it will take patience, and it takes letting the market come to you to do it, and not trying to rush an entry. Right? You could say, well, you can get a signal to way over here, and gave up the top and blah blah blah. Well, yeah, that's the market being bananas and not really knowing what to do. But here it was, I think I know what to do, and since then it's been a one-way trend. So for XRP, still bearish, still lots of volume gap to chew up, and if you don't hold the 200, what do? Well, I guess we start looking for areas where we can draw some lines, right? Because that's what we're going to do. We're just going to draw some crayon lines. Simple or as complicated as that. So what do we want to do? We just want to try and average out, line up where price has been before. So what are we doing? We're trying to take these wicks in here, balance out some support in here, and then the resistance it provided at these levels. Why do we do that? Simply because price has a tendency to revisit those levels. Just like we showed on the Bitcoin chart. Very same thing. Remember? This is exactly what we just did. And here we are. Now, CFX. This gets a lot of attention from you guys at times, and I don't know why. But well, I guess it was a fun short. Anyways, the chart's a chart, right? So what happened here? You get your buy signal, price breaks through, big red candle, like you reverse. There's your overextension on your Z-score. So that's 2 standard deviations. So you pushed yourself well above that, and then the relative strength started to fade. Where it gets really serious is when it breaks the 0 level. And you can already see that it's starting to set up for that. And if it does continue to drop, look for the previous wave's lows. Failing those, you look to this level down in here, the lower value range, the bottom of these candles. There's lots of targets that you could kind of create for yourself. Right? They're not very far off at all. If we look at Aster, really quick, what do you see on your 4-hour chart? Right? It's all about levels. Support, resistance, failing one level, finding the next level. The 4-hour is our ramp on and off the daily. So here's your 500 MA. Moving down and to the right, and you make several attempts to break through. What are these? These are lower highs. Right? So you're failing a major moving average that is your on or off ramp onto the daily with significant lower highs. And you're making those lower highs. Know what else is happening? Doing the twist, right? You got all these twisting together now. We know that the more elasticity and the more of those averages that you have twisting together, chances are price is preparing to make a significant move up or down. So are you guys wrong in watching this chart? Absolutely not. Absolutely not. I think this is a great chart to keep an eye on. And I think that it could, if it breaks to the upside, it's the move that you've been waiting for. If it breaks to the downside, well, you know where you're going, right? That's the POC, the gap. There's the 200 sitting on a shelf. Well, we know how this goes. But all of these averages twisting together, the more of that takes place, the move coming out will be substantial. So, if you don't want to miss this move, what could you do? Right? What if it happens in the middle of the night and you're asleep? Or in the middle of the day and you're asleep? It doesn't matter. What do? Well, we have a couple choices. You could set some alerts. Real simple. Maybe you could set it at the POC. Just add an alert. Right? Add an alert at a price level if you want. There's lots of different ways to do it. It's a 4-hour chart, so how long do you want this thing to go for? Well, you can set it for however long is necessary. Shorten it, lengthen it, whatever you need to do. But what's going to happen is that you're going to get an alert when price hits that level that you've identified. So, your phone's going to buzz. You're probably going to get an email. TradingView will be sending you everything under the sun to get your attention because you asked for it. But if you're not using the alerts and you're using a system at all, you're doing yourself a little bit of an injustice, right? Congratulations for using a system because that's important. But utilize the alerts on top of that. That's going to help draw your attention to the right place at the right time. And I use the alert settings constantly, right? All the time. Now, things get beaten up and things kind of perk up again, right? This is a crypto called Xano. It hasn't been around all that long. It's a privacy coin, I think. I'm not really sure. But does price react any differently to support and resistance? No. But it's completely given everything back. And when you look where price has come to, we draw these lines, right, where we can line up past price in some way, shape, or form to create a target. Like, look at the base of these candles. Right in here and that wick. This is why we do this. And I'm not showing you this once out of the box, right? Like, we see this all the time. This is the naked wick that I'm concerned will actually get come back and tagged. But I mean, when we look for where price has been before, because current price revisits past, well, here you go. This is why we do it. And when we look on the daily, Is it less encouraging? Yeah. Why? Because even this daily candle hasn't even reached the 5 EMA or the T line. So you have all of this diverged down and to the right. All of that stuff. Still telling you that you're in a downtrend. Don't get baited by the green candles that you see that for whatever reason you believe are bottoms. Look, they might be. But is it worth being wrong? No, I don't think so. Stick to a system and live and breathe it. You don't have to change. Just be consistent. Right? Consistency is key. The more consistent you are, the better trader and better chartist that you'll become. Micro-strategies or strategy, whatever they call it. We know the drill, but we show you how, failing the 200 on a weekly chart, first off, finding it from up here to down here seemed impossible, but here you are, and breaking it didn't really seem probable, but yet here we are. And these green candles, well, maybe stop the bleeding, at least for now, but this is still a bearish chart. You can't close above the T line or the 5 EMA. In fact, you can just kind of wick it and then pull back. Now, to the upside, could you kind of push to get into that little volume gap and maybe test this level or the 20? Sure, I guess. But right now, it's still a bearish chart, and I would be looking for these other levels back in here. Current price looks for past, break one level, find the next. This is the perfect example of the twisting effect. In this case, price moved higher. Right, so that's why you're looking at that Aster chart the way you are on the 4 hour, because you want it to break out. Right? You want to basically invert the Aster chart upside, or invert this upside down, right? I know that's what you're waiting for. But you have to trade what's in front of you. This move in here could be just one of those impulses down and then you go sideways without any real test. Because remember, this is the 200. This won't be a cakewalk. Impulse down, then you go sideways, and then you fail. We see that all the time. That puts the lower value range in play and puts the 500 MA in play. And you can see why we call these things slippery slopes. Right? Because they sure as heck can feel that way. This is Amazon. Right? Has it behaved any differently than anything else we look at? No, it's got a little flexibility to it, but it pretty much does exactly the same thing. And what we deduce from one chart, we can deduce from another. When we look at this red candle on a weekly chart that, blew through the 20, blew through the 50, wicked through 100 MA and basically closed just above it, there's a message there, right? The following week's candle does not even challenge the 50 and or, even in this case, the 5 EMA. The week before, you have a big green candle. Everyone thinks the worst is over. Bullish engulfing. I look at that chart and I go, you didn't even challenge the T-line or the 5 EMA, so that's just a green candle and a downtrend. That's all it is. And here's this week's candle thus far, doji, at a major moving average. The relative strength, though, is still not there, which just makes it more likely for price to find it difficult to go in the direction higher. Can it start to come back in and creep up? Sure, but I'm just right now, it's just not there. And we're starting to see that on a lot of different charts, right? We really are, and I think it means something, right? That we've probably pushed and pushed and pushed, and the market's going to maybe take a little bit of a break. But it won't be dramatic. I don't think the changes that are going to come are going to be shocking, although there might be shocking days. I think it will be kind of a slow, elusive thing, and you wake up one day and go, wow, we're 20% lighter than we were 18 months ago, or whatever the case is. I think that's the kind of thing. It's going to be that slow, elusive grind down, and then you wake up and go, huh? How did we get there? Here's Apple on the weekly. Look at breaking through the zero level on this Z-score does. It produces the buy signal as well. Those are moves we're interested in. And when we look at the dashboard, maybe I pull this up. Yeah, if I look at the dashboard, where's Apple sit? In the number 2 slot next to gold. Well, what are the 2 slots that we're interested in trading? The strongest of the strong, right? We want to trade these. What's it telling us to avoid? IBIT, which is Bitcoin. So compared to the SPY, compared to gold, compared to XLF, compared to XLK and IBIT, Apple on this weekly time frame is in the number 2 slot as a strong buy in its trading over the SPY, but less than gold. You want to trade the strongest of the strong. You don't want to be drafted around the track by the big players and need them for any kind of price appreciation. You want to be able to run on your own track, on your own speed, without any encumbrances. You don't want to be the thing that's drafted around the track. Let's look at Planet Fitness. This is an interesting chart, right? So here's our weekly. Price came all the way back to the 200. Don't be alarmed when price comes back to the 200 MA. Be alarmed when you break it. That's when you really have a problem. Because that is our most basic bull bear indicator. Right? So we broke 20, broke 50, got a little bit of love for a couple weeks at 100 MA, and then capitulation. Right? So remember we saw those sideways candles? Here's another example. This is just a weekly chart. Impulse down, sideways, unable to break out at all, and then the next candle, boom. And look at the gap that it had to fall through. Any more proof? Use these on your chart to trade in and out of. You'll be able to identify these opportunities very clearly. Right? So if you're short up here, you know this gap is here, and you're like, if I'm lucky, right? If the moon and the sun and the stars line up, I'm going to get to be able to short into that gap. And you even know where price may go. Maybe you want to check yourself out. You know, you're short up here and you want to check yourself out at the 200, and you can see that the chart's working in your favor, that momentum's on your side, then go ahead. That's why you do this. What else can we look at today? I feel like there's so much going on that, whoops. There we go. Monero, weekly chart. Another massive sell-off. Where do you find some love? Right at the 50. Would I be concerned if I broke the 50? Absolutely. But right now, we're still holding this kind of trend. So although you have these, powerful retracements, at least it held the trend. And as this is unfolding, what to expect. So if you were trading this chart, my Z-score is going to get in the way a little bit. But if you were trading this chart, and there's your buy signal, you see this massive doji, but this little point here and then this red candle, you might be like, you know what? I don't like that. Well, the next candle, breaks the T line, sits on the 20, and notice that your Z-score broke 0. Now you've got the sell signal. T-line and 5 are open. They broke through the 20, and so does price. Look, the momentum that we talk about as you approach these levels. This is still open, diverged down and to the right. So yeah, you've had a better week, but you're just bouncing around here at the 50 while trading under a sell signal with this stuff open, diverged down and to the right as you approach a major moving average. We know what happens. It breaks it more often than not. This will just continue to repeat and repeat and repeat. This is the weekly B&B chart. This was our oh you know what level. Well, why did we draw it here? Because we're connecting what we demonstrated earlier, just those areas of support and resistance for price, because in the event of a pullback, price is drawn to those levels, right? You can see all that concentration of price there, and that's a comfort level for current price. Oh my God, I've been there before. My friends have been here. I think it's okay to hang out. Basically, that's what's going on. Now, if we break that level, well then, we know how it goes. But right now, this is still a bearish chart. This could just be impulse down, sideways, wait for time to catch up, price touches the T line or the 5, and then falls down again. There's that, like we just showed. We're not out of this yet, right? We're just not. There's Zcash. What changed since Tuesday? Nothing. Nothing really. Thursday, Tuesday. Yesterday, when we talked about it the day before, it was like, let's see if we can find our 4th level, because we hit the other 3 that we drew on here. Yesterday's candle, as it wicked the 20, you'd be like, no, blunt's wrong. And then today you look at the chart and go, oh, maybe not. But why? See this? What was the trend telling you? The trend was telling you that this is just a play candle, right? It's just going to wash out. Or someone out. Because all it did was wick the 20 and fade. The next candle, same thing, wick the 20 and fade. This was your tell. This is your tell. That's the key. And you look at the Z-score. It's in the 5th slot. It's told to avoid. It's underperforming everything. So it's something that doesn't have a lot of strength, and thus probably not the best along in comparison to other things. So have we hit the 4th level yet? No. Will we? Who knows, right? We just go one candle at a time and use the little few rules that we have to help guide us through. But a lot of you I know are feeling stressed because the market's whipsawing everybody around. 1 minute it's here, 1 minute it's there, only to end up closing right in between the 2 crazy levels that you saw earlier in the day. And in the meantime, you're just death by 1,000 cuts. Just take a step back, take a deep breath, listen to the voice inside your head, and lower the risk, lower the time, or increase the time frames. Let yourself kind of get in a flow and not in the chop. And that's really one of the best ways to do it. Just keep it simple, right? You hear the old KISS theory, keep it simple, stupid. This is more like keep it simple so that you don't look stupid. If you do the little things that we show you here day in, day out, you're probably going to be okay, even through the nonsense that we see. Just check the ego at the door. Block out the noise. It's just you and the chart. Just follow the chart. You don't have to front run it. Just follow it. Just be the limo driver in the millionaire's car. Just listen to the chart and do that. All right, so listen, I'll let you guys go for now. It's 5:30. Time for everyone to have dinner and a cocktail. So have a great weekend, everyone. We will see you on Tuesday of next week. And take care and have a